What is good, guys? It's Rey-Jay back with another video, and in this one we're going to be talking about the one and only SPY, the Nasdaq, the QQQs, and the indices, break down what the charts are telling us and what you should be watching for tomorrow, and what data is coming out that could also move the markets. Now, before I break anything down about this though, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share, a free NEO share, or a mix of all of them. It's a limited time offer. The offer ends tomorrow, so make sure you check it out before they run out. With that out of the way, let's get on with the video. So I was actually asked a question about what's my view about the markets right now, because I've been talking about upside, and as you guys can see, the market's green again. QQQ just broke its highs from many months ago. Actually, we're actually at one of the highest places the QQQ has been since September of last year, and the market's continuing to just rip up and rip up. But what's going on with the crash, right? Many of us were talking about the crash with the whole banking crisis, with inflation being high, with the rug pull to come, unemployment going up, the contraction, the recession, and all these things. Here's my view. I believe, yes, the market will crash. I believe there's going to be major downside coming. I'm in that camp right now. But I don't think it's happening yet. Okay? I think that in the future, there's going to be a big drop to come, a big correction, even the crash, whatever you want to call it, it's coming. Maybe it's going to come next month. Maybe it's going to take a few weeks from now. Maybe it's going to happen later during the year, but sometime it's going to happen. But as of right now, something happened. And what happened was, a lot of people thought the market was going to crash around like March to April. And what happened was, tons of people, they started shorting extremely, extremely hard. Look at the put to call ratio for just this week. 2.37. We had almost 2 million puts expiring. And what is the market doing? They're squeezing the shorts, destroying them. Because if everyone is turning bearish, if the majority of investors are just buying puts, the market makers are going to cause the opposite most likely. That's what tends to happen. And that's why now the market's squeezing. And what I've been doing in this channel, basically in these videos, is I'm telling you what the charts have been telling us, and that is they were looking bullish, and I was correct about that. Look at how the QQQ has been moving for the past week, breaking these highs. Once again, the highest level on the QQQ since like late last year. Pretty crazy stuff altogether. And what I'm trying to tell you is, for now, I don't want to talk too much about the long-term future. I do believe there will be a crash because of their earnings to come out. I don't know how bad this next earnings cycle is going to be, but the one after is most likely going to be bad. The recession is going to hurt us. Once again, I'm still in that camp. I'm still bearish longer term, medium term, yes. But for tomorrow in particular, maybe even going into next week, the market is still pumping. The market is still making new highs. The market is not showing signs of it dying just yet or crashing just yet. And the best thing to do is just read the charts for the short term. I also like to talk more about the short term than the longer term, because the longer term could be very, very capricious. And that's the reason why I'm still telling you guys, when we look at the data, there is still a lot of things suggesting that the market could continue to rally. The market is not a true reflection always of the economy. Not always, right? It's not always a reflection of fundamentals. It is simply going to run based off manipulation, based off what other people are doing, based off the derivatives market and the options chains, and so many different factors. It's also based off sentiment, and once again, many, many different things out there. The sentiment right now is suggesting that, investors think the market won't crash that bad. They think the banking crisis is not that horrible. They think the Fed may actually end up pausing sooner than expected. All these things are still playing out, and that's part of what is pumping the markets. But if the market gets a reality check, maybe going into next week, maybe going into the next couple of weeks, once again, we could get a big rug pull. All right, especially because we have so many gaps below. But right now, going into tomorrow, I'm not seeing a huge rug pull. I think it's unlikely. I'm going to break down exactly why that is. So as far as data goes, we have PCE coming out. We want PCE itself to be about 5.1%. That's the forecast right here. And we also want core PCE to be about 4.7%. This is all happening 1 hour before the market opens. So please be ready for this. This will affect how we open. Now, what else is happening is when it came to CPI that came out, and CPI actually came out for the month of February, just a couple of weeks ago it came out. And once again, PCE is coming out for the month of February. It's not for March, it's for February. Now, the reason I'm talking about CPI is because CPI wasn't that horrible year over year. It technically has still been respecting a bit of a downtrend, at least when you look at it when it isn't necessarily when it is adjusted, excuse me. And also there were different sectors that were pretty mixed. Some sectors were a little high, so I do believe that so far CPI was not that horrible in terms of compared to like the previous month. However, I want to note that it still is very hot because it was at 6% in total. So, depending on your perspective, it's still very hot. So, the Fed has to continue to tighten, but it's not necessarily like skyrocketing as of right now. And this basically tells me that the next PC that comes out, which is tomorrow for the month of February, it's probably not going to be that horrible. I think it's going to be very close to what the forecasts are telling us. And if that's the case, it could actually help the markets. Now, tomorrow, just remember the market is going to fight. There's going to be a massive, massive battle tomorrow. Tomorrow, the shorts are going to try to crash the markets. They're going to try to smack the markets down. We have almost 2 million puts expiring. They want more of them in the money. And the market makers are not going to want that. They're actually prioritizing the puts right now, and they're trying to actually cause pain for them. The market makers are going to try to pump the markets. So it's going to be a big war between institutions. Now, for that reason, I want everyone to be prepared for anything, right? Always be prepared for anything. It's very important, especially because SPY did fail to break 404 today. There are these gaps below. So if this thing does turn bearish, you have to actually look at this gap at around the 401 area. There's also 400, 398, and like 395. And then the bullish case is going to be a break above 404, pumping us to 406 and 408. What do I think is going to happen now? In my opinion, I think consumer discretionaries are doing very well. They may help pump the markets. I think there's no true sign of the market crashing or like reversing just yet. If you look at the daily MACD, it's continuing to get bigger and bigger. The histograms, the PPO is still looking strong. There's once again no true indication of the market reversing yet. And based off the options chain, based off how much we're moving, how we're holding, based off how the market is performing, and from a technical standpoint, we look bullish. It looks to me like the most likely possibility is us continuing to push up, get to 406, maybe even 408 on SPY. That would be crazy if anything. On SPX, SPX is trying to fight almost. This is a little hard to say. I mean, I keep on talking about SPY when referring to SPX. It's basically 4,050. We're trying to fight for that. I think we could break it, and if we do break it, then there's 4,080, which could actually come. If it breaks 4,080, this thing is going to fly to about 4,100. If that happens, SPY can reach around 408. It is possible. The odds are favoring that based off this price action. And I also want to note something else, and that is we have a possible slanted head and shoulders that's developing. It looks a little bit like this. Basically, when you look at it, this is looking like a left shoulder. This is looking like a head. You can see our support right here was holding us. It's kind of slanted, which makes me think if this is going to play out, a lot of investors are going to be looking at this high if we do get to the 4100s, and they may actually recognize this. And if it does play out, that means we could get a big rug pull soon. That is a possibility. But right now, let's not worry about the rug pull or anything like that. Let's just look at what the chart is telling us. And the chart so far, just look at these candlesticks, look at the trend. It still looks strong. There's no sign of it reversing or tanking just yet. We're not going to crash all the way down to 3,000 in just one day. It's not going to happen that fast. It's going to take a while. So we have time. I just want to let you know that right now, for the short term, it looks bullish. That's why I keep talking about the market looking bullish, the market squeezing. And I was correct. For the past over a week and a half, I was saying the market's probably going to run up. We're probably going to squeeze. That's what's happening so far. It's probably going to continue. All right. Just wanted to make that as clear as possible for everyone. I also want to note now on the QQQ, something else crazy happened. We are basically making the highest level we've seen since September of 2022. This thing is on fire. It's on fire. It's not close to its all-time highs. I don't see it going to all-time highs. I do believe it's getting very close to a top, but I don't have any evidence to prove to you that this thing is done running. The RSI is like kind of overbought. It's getting very close to overbought's territory. That's why I'm talking about this thing entering a topping process soon. But once again, just because we're entering a topping process, it does not mean we're done just yet. We probably have more room to go. The technicals are still looking bullish. That's the crazy thing. I also want to note that I think there's a gap up here somewhere, like around 318 or so. We also came close to that. If anything, we're actually breaking above another very important resistance. That's that 315 to 313. We actually closed above 315, closing at 315.68. We tested 316. The daily candle is a little bit more in favor of the bulls. This is looking more bullish than bearish as of right now. And like I said before, I want to warn everyone that don't become too comfortable of us just like pumping forever. There will be most likely a reversal in the future, just not yet. And we have more upside to come most likely. So if the triple Q does continue to pump, okay, off PCE, this thing could get all the way up to 318 to 320. The bearish possibility would be coming all the way down to 313 then 310. I am not seeing that being the most likely possibility. I think we could maybe like gap down a little, then just pump intraday. Very possible. The odds favor this thing breaking up again, getting a melt up temporarily. AMC is going to fight for $5 basically, depending on what the market does. As of right now, it's holding up okay. Nothing too big or too horrible is happening so far. It's just trading sideways. If it could hold $5, then it has some potential to try to get back to 5.5. But first, we have to close above $5 tomorrow. NEO is strong. NEO is up 6% again. That is very impressive. MACD is wide open, looking strong. We got the crossover on the PPO. Histograms look really, really nice. The RSI is barely at 63. It's not even completely overbought yet. NEO looks strong. I was talking about this yesterday. We could see NEO continue to pump. Because consumer discretionaries are doing well, I think NEO has the potential to keep going, but it's going to depend on deliveries. If they give us a very strong deliveries report, it's going to fly to the moon. If they don't do too well, this thing is going to crash. Okay, so be ready for that. For tomorrow, I think Tesla and NEO could pump, so we might see this keep going. On the daily, on the VIX, it's not looking too good again. The VIX, once again, the MACD is wide open. It's barely holding 19. We have a long wick right here, a long wick, another red candle. It looks to me like the VIX might be getting closer to the 18s. Right? It's not looking that strong. I mean, it could try to bounce. It is a possibility depending on PCE, but the odds are favoring this thing coming down to the 18s. And I'm starting to think that if you look at these technicals, it's still looking weak. There's no sign of a good counter trend bounce. It's trying to hold 18.8 around there, not looking too strong. And we have a lot of these wicks up top. Look at the wicks on the top. It looks more in favor of the bulls, if anything, on SPY, the bulls for the QQQ, more in favor of it coming down. The SPY might push this down even lower. The S&P 500 implied volatility may continue to drop. For Amazon, I told you all the level to watch in Amazon is 102. This thing managed to actually close at 102 at resistance. If we could actually see Amazon break above 102, it has the potential to actually continue to keep going. But we have to hold above 102. So far, we just barely closed at resistance. If it breaks 102, it has the potential to keep going and going and going to 103, 104, and maybe even hit 105. And that could be like a very extreme top because the RSI is getting very overbought. But I do believe it's possible if we could get a clean break above 102 and hold it. Now, Tesla, one of my favorite stocks right now, is looking very, very good. It did slow down a bit as time went on because the whole market did slow down a little bit. But overall, this thing hit 197, currently at 195. It is continuing to uptrend, making higher highs and higher lows. And overall, it looks to me like since we held 195, as long as this holds tomorrow, I don't know how it's going to open up because of PCE, but the odds are heavily favoring Tesla going all the way up to 200 to 202.5, in my opinion. 200 is likely going to come. We have some resistance around 198.5 to 200. I think we might actually break it and try to get to 200, maybe even 202.5. Very possible for Tesla to try to achieve that. And I also want to note that we have big data coming out. Once again, for many of these tech companies, also for Tesla, the odds do heavily favor more upside. If you're bearish on Tesla, make sure you watch like 190 and also 188. Once again, I just think it's unlikely Tesla drops that low. It looks to me like it wants to get to 200. I think it's very likely. For NVIDIA, I told you guys that it might retest 275, excuse me. It might retest that. That is what ended up happening. Now we got that break. If it does break above that, I'm going to be watching 278 and then about 280 basically. Those are going to be some very important levels, particularly 280. If we could actually get a clean break and hold above 275, you have major resistance there. Overall, the structure in the video looks like it might try to keep going. This still could be in a topping process, though I know NVIDIA is overextended, so I'd be very careful with this stock. But just so you guys know, if it does break 275 and it keeps going, it's probably not going to run way too much from there. I don't see it going to like 300 or some crazy high number. Resistance is just going to get stronger over time. This is more overextended than other stocks out there. Apple closed above 162. That's a good sign again, right? And we do have a potential bullish triangle developing. In my opinion, if you're bearish on Apple, you'd watch this thing come all the way down to like 160, maybe even 157.5 if that doesn't hold. If you're bullish, you're going to be watching this thing go for 163.5 followed by 166. In my opinion, the odds are favoring Apple trying to get to above 163 and slowly uptrend to the mid 160s now. It seems a little bit more likely once again, but once again, be prepared for anything because of PCE. But like I said before, the odds are heavily favoring upside again. And for Google, this is going to be my last one. I want to end this video as soon as possible. Google did not do what I thought it would. I told you guys that Google would probably try to get to about 103 very soon. It actually came a little short, closing at a 101, a little bit in the red, but we do have this gap above, so it might try to fill this gap and get closer to 102. Google is starting to show some signs of relative weakness, but it did pump like crazy over the last few weeks, so it is starting to show signs of price exhaustion. I still think Google has the potential to try to get back to 102 if the market pumps. And then if it breaks 102, there's almost 104. And then there's 103 to 104. And then we have 105 just above there to 107. In my opinion, I think it's going to try to get to 102 and maybe retest 103, but I'm not expecting it to make a massive move because it's still looking relatively weak. 10-year treasury yield and also the dollar. The dollar is down to 102. 10-year treasury yield is starting to downtrend again. I told you guys we had resistance right here around this 36 area. And now it's starting to downtrend, very similar to what I told you. And we do have this gap down here. If this thing starts tanking to fill this gap, that's going to be bullish for the stock market. Could it actually rebound and try to break 36? If it breaks 36, that's going to be bearish for the markets. So far, it actually got rejected. If it keeps coming down to fill this gap, that's going to be, once again, more bullish for the markets for SPY and QQQ. The dollar is still showing signs of weakness. The daily is still downtrending. And it looks like it's going to get a retest of this 101.92 level, very close to 102. If that happens, it could try to bounce, but if it ends up breaking below 102, it might end up seeing the 101s. If that's the case, that would be bullish for the stock market temporarily. Just temporarily, right? I'm using the word temporarily. I'm not saying this will last a super, super long period of time. I'm not talking too much about the timing. I'm just talking about tomorrow in particular. All right, guys. So thank you all so much for listening. Once again, yes, technicals look bullish as of right now. The trends look strong, but there's no guarantee this will last for like another 3, 4, 5 weeks or anything like that. I'm still a bear in this market. I do believe the market is going to take a big hit, but it's going to take a lot longer than many people would have expected. Partly or largely because of the options chain, because so much shorting has been going on for March. Also for April, there's more shorting, right? This doesn't guarantee the market will just hold up for all of April because we have earnings coming out which may not be too good, especially bank earnings. And we also have more important pieces of data coming out like CPI. So be very careful. I just want to note that for this week, just for this week, we are still looking more bullish. All right. All right, thank you all so much for listening then. Please have an absolutely incredible rest of the day, and I'll see you guys in the next one. The market to the moon because the long-term future is still incredibly bright, and peace out.